Welcome back to the Dividend Diplomats YouTube channel, guys. You've got Bert and Lanny, your boys, the Dividend Diplomats, guys, and welcome back to another episode here on the YouTube channel where we're going to talk about three dividend stocks that are on my radar right now as the stock market is a little shaky and is kind of coming down for a couple of days here over the last few.
All right, everyone, before we jump in, smash the heck out of that subscribe button. Give this video a good old-fashioned thumbs up. We're still in earnings season, although we're at the tail end. And as the market continues to twist, it continues to turn. People are looking for recession, not. We're recording this on the evening of 5/16. The big news was that Home Depot did not hit their expectations. They reported a slowdown in what looks like to be a tougher 2023. So that caused the market to slip a little bit amongst everything else, which is why you looking at three stocks right now, Lanny, is fantastic because when others are running, Lanny and I are just like, let's buckle up. Let's keep buying these great undervalued dividend stocks.
Yeah, when others are running out, we kind of run in. That's the nature of the game for dividend investors. It's buying more yield than what you usually are able to with high quality businesses. And, I personally obviously biased here. I feel like these are three, very solid and sound, easy to understand businesses out there in the marketplace. Yields aren't crazy at all on today's list. We're talking yields from 1.3% to up to 2.82%, but really it's all about the ability to grow dividends, and that is what all of them do very well. Three different industries, if I may add. One is in really the kind of the beginning part of the food phase on creating food. One actually is a food product, and then the other is in the health insurance arena.
Yep. And if I'm correctly, any between you and your wife, you own all three of these companies, correct?
All three are actually in my portfolio as well.
Ooh, all right. Speaking of the number three, that's an excellent segue because we're going to run each company through our dividend stock screener, which features three metrics and one bonus metric: price to earnings ratio less than the S&P 500, two, payout ratio less than 60%, three, history of increasing those dividends, and lastly, that bonus metric is the dividend yield. So, Lanny, I think it's time. Big reveal. You want to kick it off by talking about that first dividend stock?
Yeah. I'll kick it off here. And, as Bert was saying, stock market is now at around, again, we're timing this video. It's a Tuesday. Bert, what is it, May 16th tonight?
It is. It is at
Uh,
10:05. It's I think halftime of the Lakers Nuggets game right now. So we timed this one well.
yeah. So, yeah, the S&P 500 is now kind of hovering around 4,100, down almost a percent today. The last 5 days dating back to last week, they're down about 1%. Last 30 days, down 1%. But they're still up 4% in the last, 6 months, and this year still up almost 7.5%. So, again, longer term already this year alone, they are showing a lot of green in the market. But yeah, that first stock though, again, guys, not to let's just get into it. We got Archer Daniels Midland, ticker symbol is ADM, and they are on the road, not the road to WrestleMania. They are on the road to being a dividend king here. And man, this company is just a beast in the economy, I would say, Bert.
I would agree too. And this is what you're talking about. They're at the beginning of the food process. They have a lot of the unsexy part of owning a food company where they'll have like the corn syrup, a lot of the process stuff that goes into it. They get the raw goods and they get it and they ship it out to all those food companies. They are a huge part, and that's why we love having them in our portfolio. So let's jump into the metrics here. Their price as of today's close was 73.15. That forward earnings was 688. P ratio is 10.63, almost half the S&P 500, which is right around in the low 20s as we speak.
Yeah, you gotta love it. I mean, this company who provides a lot of grains, seeds, you name it, into food products that get produced. A 10 PE ratio is insane. Again, we're using Yahoo Finance estimates right now. And again, they're kind of in the beginning of where the inflation really hits the consumer as well. So they're the first ones probably being able to jump their price point. But yeah, let's look at the dividend payout ratio. They pay a 45 cent per share per quarter dividend, $1.80 per year. That dividend payout ratio is more than safe. It is Tony the Tiger. Great. That is 26%.
Oh, geez. Yeah, I'm sure ADM's all in those frosted flakes somewhere
Probably,
along the line.
actually. Yeah.
I would assume so. So that's great. All right, let's look at that history. We've already said they're almost a king. They've increased for 48 years. That 5-year dividend growth rate is 4.99%. So not the highest, not the lowest, just right.
Yeah, and that last dividend increase, they increased it from 40 cents to 45 cents. So, 12 and a half cent dividend increase that they just had announced earlier. So that is more than double their 5-year average. So as most companies that you're seeing are slowing down, maybe a couple dividend cuts, thanks Intel and Paramount. Too soon, too soon. But ADM is not only tracking above that dividend growth rate, but it's 2x.
Beautiful. Now let's see the yield. Let's see how that tracks compared to the S&P 500, which is usually around that 1.5-ish, give or take a 10 basis points here or there in any direction. The yield is 2.46% for ADM. So a nice little premium to the S&P 500. Again, like you said at the beginning of the video, not the highest yielder, not the lowest. They're just kind of at a very solid yield with a solid dividend growth rate.
Yeah, you got to like the growth rate recently.
So let's summarize ADM here. 10.63 PE ratio, payout ratio is 26%, 5-year growth rate 4.99%, 48 consecutive years, increasing that dividend, and that yield is 2.46%.
So yeah, and yeah, again, down almost 20% this year, down 18.5%. So while the market is up, ADM is down, but not out. And guys, let's get into that second dividend stock where maybe ADM was on the road to being a dividend king because they're looking up at a dividend king currently. And who is that, Bert?
Hormel, ticker symbol HRL. They're looking at all their products and we're like, we supported you. We supported you. We're here. Hormel. We are your big supplier. I don't know if that's true or not, but that's I guarantee you ADM's products are somewhere in Hormel's line of companies. They are obviously everywhere in a grocery store. That's why they're dividend king. When budgets get tight, you still need food. You still need protein, and that's where Hormel continues to be in your cabinet all the time. You need to get those gains, everybody. Your dividend portfolio needs straight gains. So with that, we like Hormel, and I'm pumped up, Lanny, that they made the cut for your dividend stock watch list.
Yeah, I mean, they got the big brands. They got Chili, Planters, Peanuts, Skippy Peanut Butter, Spam, Justin's Peanut Butter, Jenny O Ground Turkey, obviously all the Hormel pepperonis, corn nuts, Hormel Chili, Chi branded products in the store. I mean, Applegate, they've got a big laundry list of brands that we all see in the grocery store. We see at family gatherings. We may see at your lunch on your sandwich. But yeah, Hormel trading at $39.03. That price to earnings ratio. Analysts are expecting $1.73 in earnings per share. A little bit higher on the price to earnings ratio, unfortunately. They're at 22.56 right now at the time of this video.
It is worth noting that is lower than a lot of their historical PE ratio too. So while it may be higher, may not be the lowest, I should say, compared to other companies. Hormel, that is a discount for them because they are quality company that typically trades there at a premium. Let's look at that payout ratio. Their dividend to $1.10. That gives you a payout ratio of 63.58%. Just a scotch, just maybe a couple extra pepperonis above our 60% here. Nothing too crazy though, not alarming. Just because the company's above 60% isn't being run for the hills. We'd be much more concerned if that payout ratio were 80, 90%. Then it would be a different story, but that's not out of line for a consumer staple company.
Or if they were dealing with a chip shortage and a multi-billion-dollar plant that was being made in Ohio.
I wasn't sure if you're going with a food reference with the chip. It's either chili. I see what you did there. Yeah, maybe, or maybe they were dealing with some overpriced content that they just couldn't quite get out to consumers.
Could be.
Yeah, all right. So
dividend growth. What's the growth look like on the dividend, Bert?
All right, we've already said they're a king, so that's easy. 5-year dividend growth rate is 8.42%. So very, very solid.
Solid. I mean, again, when you think of recession, You think of inflation, they're able to pass it on and they're able to keep cranking it out. Whether the people are buying less, they're making it up by price. Last dividend increase, they've been doing, about 1.5 centers. So I think the last one was 5.8% back at the end of 2022. Probably would expect something similar going forward with Hormel, just staying consistent. Why not? They have 56 years.
Yeah.
That's a streak. The Undertaker couldn't even keep that one up.
God, help us if the Undertaker streak gets to 56, ever got to 656. His match would be 2 seconds long. Like, get him out of there. Like, wheel him in and take him, let him get the.
At least,
Yeah, all right. So Hormel yield 2.82%. So let's summarize the metrics before we go to number 3. PE 22.56, payout 63.58, 5-year dividend growth rate is 8.42, 56 years of increasing the dividend with a yield of 2.82%.
wow. All right, there it is, guys. Let's dive in to not into health insurance, but not and we're talking about Elevance Health. We've all seen me talk about this before.
Right.
Ticker symbol is ELV for Elevance Health. They changed their name, ticker, and all of that. I really like them when they drop below $450, and that's the issue with where I trade right now for the majority of my individual stocks. We all know on my Vanguard stuff, I do it automatically on SoFi, but with I use Ally investing, and I have to buy whole shares. So it always kills me that Elevance is at $445.88 a share.
That's high. And it always makes me smile every single time because I forget it too. And then you bring it up, makes me chuckle. And what's going to be funny is when they get into their EPS, just because of the lower share count and how high the earnings are, the overall, just the dollar amount just always makes me chuckle. So I think
who's doing covered calls on Elevance Health? I'd like to talk to you.
Yeah, make sure you like this video and keep us updated because kudos to you for having that large of a position. All right, so let's go through the metrics here. Their price is 445.88. EPS is 32.84. That is a PE ratio of 13.58.
Boom, there it is, guys. A nice undervalued stock right there by that valuation metric, price to earnings. But let's look at the dividend payout ratio. Currently, they pay a $5.92 in dividends per year, or $1.48 per share per quarter. We thought that ADM was low at 26%. Well, Elevance has got them beat at 18%. So again, very safe dividend. They can keep juicing that up by double digits if they wanted to. Because Bert, what does that gosh darn dividend growth rate look like, brother?
It turns out they are juicing it by double digits because that 5-year dividend growth rate is 11.62%, and they have increased it for 11 plus consecutive years. Let's freaking go. The metrics speak for themselves with Elevance.
Oh, it's true. It's damn true, guys, because Elevance Health, that last dividend increase, I know was pretty nice. First off, let me know in the comments too below if you own ELV, as I've been talking about it here on our channel. That last increase went from $1.28 to $1.48. So doing the math, a nice 15.6% increase. So what does the dividend yield look like? Because the stock is down 11% this year, trading at $445. So the dividend yield is 1.33%, slightly below the S&P 500. But Bert, why is this a cool and a pretty decent stock to own?
Cool and decent stock. Yield is low, but it's got the high dividend growth factor with that double-digit dividend growth rate, well past 10%. So again, as we always say, if you have a low dividend yield, you want a high dividend growth rate to compensate for that low yield, and that's where Elevance checks that big old box. We'd be concerned if it was a 1.3% yield and a 3% dividend growth rate or something like that. That would be no good, everybody. Get it out of here. Forget about it. But Elevance doesn't check that. All right. So let's summarize this here so I don't get too carried away. PE ratio is 13.58. Payouts 18%. Dividend growth rates 11.62% with a 15% last year dividend increase, with increasing for 11 years and a yield of 1.33%.
All right, guys. So, I own all three stocks. The best out of all three that I really like is actually ADM. I'm hoping that they can get below that $70, around that $70 per share price. We've got about 5% to go on the stock price. So that's one I'm really watching. Hormel, I would like it a little bit lower than 39 just because I bought it around these prices a few months ago. So I'd like to get them in that 37-ish range. Elevance Health, I bought between 440 and 450 throughout the year, maybe even a little higher. Just because it's a huge stock price, 440 and below right now, I'm really keen on right now. But again, I like all three of these stocks. And anytime there's a large price drop in them, I'm looking at adding to my position if I can.
So let us know, everybody. What do you think of these three companies? How many do you own? Do you have the full trifecta? You betcha by owning ADM, Hormel, and Elevance Health. Let us know if you're watching other stocks too and what they are. And remember too, if you haven't already, subscribe to the channel. Give this video a good old-fashioned thumbs up. And Lanny, what else do we need to tell these viewers?
Well, first, guys, keep saving, keep investing, run in when people are running out, build that passive income to financial freedom. And you're either with us or you are against us. That was Bird and Lanny from the Dividend Diplomats, over and out.